My client called panicking. 55 employees who worked overtime in 2025 and received their W-2s with missing information. But why did that happen? Find out now so it doesn't happen to you. Welcome to Simplify My Numbers, the show for the 765 entrepreneur. 7-figure revenue, 6-figure take-home income, and 5 figures lost to taxes every year. If that sounds like you, you're in the right place. My name is Fabrice Matan. Each episode, we break down real tax planning strategies that help 7-figure business owners legally reduce taxes and keep more of what they earn. Let's stop guessing and start planning your taxes on purpose. Let the show begin. 7, 6, 5, 4, 3, 2, 1. The Simplify My Numbers podcast is for informational and educational purposes only. Hey, welcome to Simplify My Numbers, the show for the 765 entrepreneur. You remember? 7 figures in annual revenue, 6-figure take-home income, but you're stuck paying 5 figures in taxes. Now, we're here to try to change that, right? And so in this first episode, the one thing that I wanted to discuss was 2026. And the reason why is because I believe this is going to be one of the most confusing tax season in a very, very long time, right? And the reason why is because we had a change in the tax code in 2025. A lot of changes literally happened in the middle of the year. So when we started the year, we started to run our business a certain way. And in the middle of the year, we found out about a new tax code that kind of changed everything for several reasons. We hear about overtime being tax exempt, Social Security earnings being tax exempt. We hear about a change in the SALT deduction. We'll talk about that. How about bonus depreciation coming back? But only for assets purchased after a certain date. So again, a lot of changes that just appeared out of nowhere. And now we're in the process of catching all of those changes on the tax returns that we're filing at the beginning of this year. And so I really consider this to be one of the most confusing tax season in years. And if you're a 765 entrepreneur, if you're an entrepreneur, with a business that's typically generating 7 figures in annual revenue, more than likely you have a few employees. So your employees are going to be affected, especially if they're working overtime for most of the time. If you are in a business where you're buying a lot of assets, right, you're definitely going to be affected. If you invest in a lot of real estate, that also applies to you. And so I'd like to kind of give you some pointers and some of those things, and also mention some of the stories that I can share with you because we went through it over the past few months. So one major thing that happened when the new OBBB tax bill was approved is that bonus depreciation came back, which is a big deal if you're buying a lot of assets in your business. Now, let me backtrack. What exactly is bonus depreciation, right? When you buy an asset like equipment, vehicle, even a plane, believe that? Or, invest in real estate, right? Your asset is supposed to have a useful life. And we apply depreciation by expensing a portion of the cost of that asset every single year. So for example, if you're buying a vehicle, we're supposed to expense that over 5 years. You buy a vehicle for $50,000, you're supposed to only be able to depreciate or to take about $10,000 of that expense as a tax write-off in each of the next 5 years. If we just apply book depreciation, just to make it simple, right? Now, when we talk about bonus depreciation, it's the opportunity to actually accelerate the depreciation on that asset, allowing you to essentially write off the entire amount of, that you paid for the asset in year one. Now, the reason why that's a big deal is because say you're buying a $50,000 asset and you're only required to put a $5,000 down payment. With bonus depreciation, you're now allowed to take that $50,000 as a tax write-off against your ordinary income. But you only spend $5,000 out of pocket, right? So instead of stretching it over several years, you'll be able to now accelerate the depreciation and wipe out the income that you have. Now, bonus depreciation was supposed to phase out, and if I'm not mistaken, off the top of my head, 2024 would have been back down to only 40% being able to be a write-off in that year. But we're taking the bonus depreciation back to 100%. So now a lot of clients understood that in 2025, it was an amazing opportunity to go out there and buy more assets if you needed them in your business. But here's the catch. It only applied for assets purchased on or after January 19 of 2025. So let me tell you a story. I have a client who actually purchased a new vehicle on January 7 and used it for business, but technically does not qualify for bonus depreciation because it was purchased before that date. And so for a lot of business owners, especially my 765 entrepreneurs, this is something that you're going to have to deal with. Go back to look at when was that asset actually placed in service? Am I actually within that window to be able to qualify for bonus depreciation? And keep in mind, it's not always the right thing to do. You really need to make sure that you need to use up all of that depreciation in year one, or sometimes it makes more sense to just stretch it out over several years, right? Definitely an item that's going to be confusing this tax season. As we file all of these tax returns, make sure that your tax professional is aware and see what you can qualify for. Now, here's what happened with my client with 55 employees who received their W-2s with missing information. With the new tax code, overtime is essentially tax exempt up to $25,000, but only the premium part of the overtime pay. In other words, most companies would pay time and a half. So only that half portion of the overtime wages received to that employee is supposed to be tax exempt up to $25,000. And also that only applies to employees with income under $120,000. Now, my client actually has a large shop, fabrication of, can't give you too much information because I can't disclose that. But essentially, 55 employees who worked a ton of overtime in 2025 received their W-2s that were, generated in the system and provided to every single one of those employees. The problem is, because the new law happened in the middle of the year, most of that information was not already built within most of the payroll providers, right? Most of the payroll software that companies were using out there. So all of those employees already paid the taxes on their overtime. The only issue is they're not aware of how much of that overtime they've paid taxes on or how much overtime they actually gotten paid. Most employees don't even check their pay stub. As long as the money is in the bank, who cares, right? Well, at the time of filing their tax returns, the tax professional should be asking the right questions. How much overtime did you actually have last year? And if you did, can we make sure that we have that number so that we properly deduct it on the taxpayer's tax return? Well, all of those W-2s went out without the information actually being reported on the W-2. And so when I received the phone call from my clients, employees were upset. They went to file their taxes. Then they found out that some of that overtime should have been exempt. And so, of course, everyone is pointing the finger at the owner, when in reality, it was the payroll software that did not have that update already included, right? In 2026, it'll be fine. But for 2025 tax year, a lot of people probably did not have the information. I have tax professionals today calling me, letting me know that, hey, we received some W-2s and the amount that the person had reported as overtime was actually less than what that employee believed he worked or was paid. And so the deduction that the employee is able to claim on a tax return is understated. Those are the things that we need to be able to catch. And so we had to go back to that business owner and essentially revise some of the W-2s to add the information. For another client, all we did was essentially break down the payroll summary per employee, showing the total overtime pay, breaking down the portion that would have been exempt, right? Because it's only the half portion, right? Not time and a half, not the total paid in overtime, but the small portion that is exempt, breaking all that down for each employee and include that in the same envelope where their W-2 was. And so as a 765 entrepreneur, Your business is generating over $1 million, more than likely, you cannot make that type of revenue by yourself. So you have a lot of employees. And if that's your situation, you have to make sure that those W-2s were issued correctly with the right information for all of your employees. Now, let's talk about the SALT deduction, S-A-L-T, right? The reason why that's a big deal. So if I take you back to what the tax code used to be, you essentially have two ways to claim what we call the standard deduction, right? If you are a single individual, just to keep it simple, your standard deduction for the 2025 tax year is supposed to be $15,750. In other words, on the first $15,750 in income, you do not have to pay taxes on that portion of your income. You pay taxes on everything above that. Now, you have an option or an alternative to either use the standard deduction that's already given to you or itemize your deductions. But to itemize your deductions, that total has to be above the standard deduction amount, because otherwise we might as well use the standard deduction. Now, what does that mean when we talk about itemizing your deductions? Well, there's several things that goes in that category. Your medical expenses, above 7.5% of your AGI, which is adjusted gross income. Your state and local taxes, right? So state income tax, personal property taxes, those kind of things. Your mortgage interest, your donations, your gambling losses, right? So all of those items are supposed to make up a total that is above the standard deduction for you to itemize. The problem was that before 2025, the SALT section of those deductions, which is the state and local taxes, was essentially capped at $10,000. Now, if you live and earn your income in a state with high taxes, right, with a high tax rate, I think in Kansas, we're looking at 5.4%, 5.7% off the top of my head. In certain states, if you're paying very high taxes, you end up losing a portion of that deduction because it's capped at $10,000. So we have clients in Connecticut, New York, Florida, of course, is tax exempt. But in certain states, essentially with high taxes, those clients were paying $20,000, $30,000, $40,000 in state taxes and were not able to include that in their itemized deductions because it was capped at $10,000. Well, the amazing thing that happened with the new big bill essentially was that you can now include up to $40,000 of those taxes. And so we have a lot of clients that are making $200,000, $300,000, $400,000 in, wages or business income that are now going to be able to itemize the deductions at a very high number as opposed to settling for the standard deduction. Again, those are the confusing things that literally happen in the middle of the year, and I'm recording this episode to make sure that you're capturing all of that information. And so the final takeaway is this: planning. At the end of the day, if you plan, you never have to react at the last minute. And I know a lot of business owners that essentially only think about taxes at this time of the year when it's too late, when you can't really go back and change the facts for 2025, right? You did not realize that bonus depreciation was applying for a lot of the assets that you could have purchased. And so you looked more at your cash flow as opposed to the tax advantage. Both important, but you have to consider everything, right? You were not aware of the change in overtime and how that was going to play out for your employees. And so you ended up providing W-2s the same way that you did every year previously. And now finding out that you've reported that information, not necessarily incorrectly, but did not provide all of the information that you needed to for your employees. And they might lose on their potential tax refund simply because you were not aware and your payroll provider did not mention that information. And then the SALT deduction. You could have found ways essentially to pay less in state taxes last year, which means less of a deduction. But if you continue to pay just as high as what you did in previous years, this time you get an opportunity to deduct a lot more. So those are the items that you definitely don't want to miss, and make sure to bring that up to your tax professional to take advantage of everything that you can qualify for this year. And so I believe 2026 is going to be pretty confusing, but hopefully you get to this episode before filing your tax returns this year. My name is Fabrice Matan, founder and lead tax accountant at Simplify My Numbers. Thanks for listening to Simplify My Numbers. If you found value in today's episode, there are 3 things you can do to support the show. 1, subscribe so you never miss a strategy to protect your profits. 2, leave a review on Apple or Spotify. It helps us reach more founders just like you. And 3, share this episode with one fellow member of the 765 community, someone you know who's working hard but losing too much to tax inefficiency. Remember, your chaos is our comfort zone. We'll see you next time.
This show is part of the ICT Podcast Network. For more information, visit ictpod.net.